So what we have is we have consumer price index coming out of Japan. And as you may already know, CPI stands for Consumer Price Index, and it basically measures inflation in a country. Now, there are actually, well, I would say 6 numbers that are kind of major, but 4 that are really kind of major. 2 are the most important ones. Okay, we've got year over year for Tokyo CPI headline. We have year over year national CPI headline. Then we have year over year CPI ex fresh food, and we have year over year CPI ex fresh food and energy. Now the most important numbers are the numbers with ex fresh food, and basically what it means is fresh food is excluded from the calculations. As you may already know, fresh food is a very volatile component in Japan. It may go up and down, and it's a very, obviously food is a very high in demand item, and it can really, bring a lot of volatility to inflation. So what they do is they strip that component out, and everybody cares the most about the ex fresh food thing. Now, as you know, most countries actually in their core number exclude both food and energy, but in Japan is such a heavily dependent country on energy and oil that they do not strip oil out of their calculations. They have a separate component which strips oil and energy, but energy and food, but nobody cares about that. It's a very important part of their inflation to include energy, because it's Japan basically has no oil at all in their own country. Everything is almost 100% imported, and it affects everything, as well as some other raw goods. So what's been happening in Japan recently is that there's a little bit of deflation going on. But what Fukui came on and said 2 weeks ago, he said that despite the deflation, they're still looking to hike the rate. They're still planning to go with their plan. As you know, Japan used to have a 0% interest rate. Then they hiked it to 1/4 point. Then they hiked it to 1/2 point in the last basically few months. Well, maybe I would say in the last year. And right now their expectation that Japan will hike the rate again to 0.75% before the 2007 is over, but nobody quite knows when it's going to happen. And what Fukui said, he said that as long as inflation is looking positive, as long as the growth outlook is good, we're still planning to raise the rates. And what's going on right now is the yen has been falling, which is good for the export industry in Japan because they manufacture in yen and sell it to foreign currencies. But it affects negatively their services sector because of the falling yen, services have to go up because the wages actually are staying very, very stagnant. They're not really rising with the fall of the yen. But overall, everybody is looking at a very strong economy in Japan, very strong gross domestic product, and it's expected to be relatively strong even despite the slowdown in the U.S. And as you know, U.S. is the #1 country that buys from Japan. So in this particular case, we are focusing on Tokyo CPI ex fresh food. Well, you may ask, well, why are we focusing on the Tokyo CPI while we have national CPI coming out? The biggest difference is that the national CPI is actually coming out for the months of April, year-over-year number, April. But the Tokyo number is a leading number, and it's coming out for the months of May. Now, it's been a very known fact that the Tokyo CPI is almost a perfect harbinger of the the nationwide CPI. Whatever it comes out, usually the nationwide CPI comes out almost exactly the same the next month, simply because, I mean, Tokyo is the biggest city in Japan, is in a major area in Japan. So that's why we're going to be focusing on that, because that's what most traders are focusing, in my opinion, and that's what causes the move. We already had Tokyo CPI come out last month, so they are expecting nationwide CPI to come out very similar to it, so the deviation possibilities are minimal. With the Tokyo CPI, however, it is expected to come out at flat, so at around 0%. And basically, with my triggers, I mean, most people expect 0%. Then there's a possibility of 0.1% or negative 0.1. Pretty much nobody expects a jump of 0.2 or negative 0.2. It would be too big of a jump, and that's what we're here to take advantage of in case the CPI surprises. So basically, if the deviation comes out at plus 0.2, meaning that the inflation is actually getting higher, that would mean that, you know, Japan may be warranted to raise rates rather sooner than later, and I think we may have a relatively large move in that case on the USD JPY down towards yen strength. However, if the number comes out negative 0.2, that means the inflation is not stabilizing and there is deflation, and they may have to, that may reduce the odds and the possibilities of another rate hike this year, and the yen may lose some ground based on that. Okay, I hope you're clear on what we're doing here. If you look at my other triggers, the regular 20 pips limit triggers with 4 units is we've got 0.4 minus 0.4 triggers. I mean, the idea is the same, but if the number is surprised by 0.4 minus 0.4, I mean, it would be humongous surprise. It would be really humongous surprise, and I think we may see like an avalanche of yen selling or buying. And based on that, I have the 20 pips limit trigger set versus, let's say, 10 pips limit triggers on the regular triggers there. Now, we may, as always, take an after spike trade even if our triggers are not hit. I'll look at the other numbers. I'll look at the nationwide CPI. Maybe all of them are a little bit higher, and that should drive the yen down short term. If we can get in at a good price on a spike, we may take advantage of that. However, I mean, even a deviation of 0.2, I think, is a very, very high possibility for a very good trade. 20 seconds. 10 seconds. 5 seconds. Okay, no trade came out exactly as expected at 0. National CPI also came out exactly as expected at negative 0.1. I mean, that's basically a no trade. Everything came out in line with expectations. There's really nothing to catch here, guys. The Tokyo headline number came out at 0% versus 0.1% expectations. But those were not really solid expectations. At 0.01 doesn't make much difference. The Tokyo CPI ex fresh food came out at 0 as expected, and then we had the national CPI year-over-year headline came out flat as expected, also 0, and the national CPI ex fresh food came out at negative 0.1 exactly as expected. It was expected at negative 0.1. So as you can see, nothing is happening. We have no trading opportunity here. I'm going to unblock the text from entry. So that's going to be all for today. And I believe we have UK GDP coming out.